Hello everyone, my name is Armenia and today we're going to talk about basics of smart money, especially market structure, swings, and time frame synchronization. This is going to be like a lot of videos. It will be about like 8 blocks where I've been talking about smart money concept, like basic stuff such as order block, fair value gaps, like ranges, premium and discount market, liquidity, etc. And at the end, I will be showing my exact strategy, how I trade, and how enter position, how exit position, and etc. So let's talk about market structure first. But first of all, don't forget to hit subscribe button and set notifications on. Also, we have a Discord link where we're posting our setups. We're alerting it's the Forex market, stock market, and also have some fundamental analysis and crypto as well. Okay, let's talk about market structure. Market structure is a sequence of highs and lows, allows you to determine the trend and potential price movement in the future. The market can be in 3 states: uptrend, which is bullish, downtrend, which is bearish, and sideways, flat. I want to tell you one thing, that in a flat market stays for 80% of the time. So it's very important to understand how to trade flat stage. I'm going to talk about it in our range video. Let's get back to this topic. We have a higher high, we have higher lows, lower low, lower high, and also we have break of market structure. You can see examples on this picture. Uptrend. Uptrend, it consists of rising highs and lows. The formation of the maximum will be impulsive and the minimum will be corrective. The formation of the higher low will be an update break of structure of the previous higher high. The structure should be used with other instruments, primarily with support and resistance zones such as order block, breaker block, fair value gap, mitigation block, sell to buy zone, buy to sell zone, and etc. To determine the structure, pay attention to the 5 and 3 candles highs and lows swings. We're going to talk about this later. This is like example of uptrend. We have higher high, higher low, higher high, higher low, higher high. More examples. Perfect. We have lower low. This is lower high. We broke the structure. We have higher high, higher low, higher high, higher low, and higher high. An uptrend of the confirmed high low will be a break in the bullish trend followed by a lower low. The trend is confirmed when 3 structural elements are formed: higher high, higher low, higher high for an uptrend, and lower low, lower high, lower low for a downtrend. This is the example. So we had this specific higher low, we have like this higher high. We broke it with lower low formation, and then we have continue like downtrend. So this is gonna be like lower low, this is lower high, and etc. etc. We also have false breakouts of the uptrend structure. Usually can be found on the high time frames correction. The price always seek to refresh the local sell liquidity, which is near 50% of the trading range, or in the discount market. For example, high low is formed on 1 daily time frame, then on lower time frames starting 4 hours, the structure can change from ascending to descending. This is a perfect example. So we have like break of market structure. Most of the people will be long in there, but we have important liquidity on this level. We're going down, and we break a structure again and keep going higher, because most of the people will put their stop under this important swing. A swing is a high or low before moving in the opposite direction. There are 3 candles and 5 candle swings. 3 candle swings. A swing high is formed when 3 consecutive candles are formed, whereas the middle candle forms the peak of an upward movement having two candles on either side of it with lower highs. This one. As you can see, this middle candle highs in like these two. Swing low is formed when three consecutive candles form, where the middle candle forms the peak of the downward movement having two candles on either side of it with high lows, which is this one. This is three candle swing, like perfect example on the market. Also, we can find swing here as well. It's very important to determine swings to identify structure. This is like one more swing as well, because if you identify this as swing, the whole idea will be wrong and you might lose a trade. So it's very important to identify swings correctly. 5 candlestick swings. A swing high is formed when 5 consecutive candles are formed, whereas the middle candle forms the peak of the upward movement, having two candles on each side of it with lower highs. Swing low is formed when 5 consecutive candles form, where the middle candle forms the peak of the downward movement, having two candles on either side of it with high lows. So this is swing low, swing low, swing high, swing high. Also, it's very important to, when you trade, to follow time frame synchronization. For the best results, you have to wait for time frame synchronization when all time frames in the same trade will synchronize, and this is the best time to enter your position. For example, your 15 minutes will be on uptrend, 1 hour will be on uptrend, and 4 hours will be on uptrend. They should be in the same trend, and then you have like high rate. For example, as you can see here, let's say this is like 1 hour time frame, and this is the 15 minutes time frame. As you can see, on the 15 minutes we still have like uptrends, and we have break of market structure, and we have downtrends, and we have break of market structure again, and we have uptrend. So your best entry point will be on this specific higher low when you're long in position. And when you short in when you open short position, your best entry will be on this lower low or on this lower high, when we're gonna like test some like order block or fair value gap, like something like this. This is like British pound, so we can identify this as lower low, but this is gonna be like lower high, three candle swing, as you can see. So this is probably will be lower low, lower high, lower low. So when we break in this specific lower high, this one, we have break of market structure. As you can see on the real chart, it's kinda hard sometimes to identify structure, because it's not like I show you here, that for example it's very hard to identify, but as soon as you get enough experience, you will be do it easily. So now here we have higher high, here we have higher low, higher low. Next higher high will be only there, and it will be 5 candle, higher high, 5 candle swing. Next higher low will be here, because if you identify higher low right here, it means on this area you had break of market structure somewhere, probably a low time frame, but it didn't happen. Next we had to identify higher high again, which is kind of difficult on this market structure. We have to identify 3 or 5 candle swings. This is this one. Then we had higher low, which will be this swing. Next higher high, 3 candle swing, higher low, higher high. So when we broke a structure, this is a break of market structure. But we had downtrend. This is gonna be like low low. This is gonna be like lower low. And we didn't have uptrend for such a long time, so this is gonna be like our lower high, and so on. I will continue. We had this low low, but then we had break of market structure right here, but probably like all this part of on the chart is kind of difficult to identify. It's probably like on this is like what I've been talking about of false breakdown of the market uptrend structure. So this is a perfect example of it. And also this is exactly example that I showed you in presentation. But then we had normal market structure, and we had this high high, high low, high high, high low, high high, and then we had this break of market structure on this specific high low. Now I'm expecting price to go a bit down to take liquidity from this high low, or we will bounce here to like probably like premium market. This is a global premium market, like here. I marked it. It's also previous weekly high, or this local premium market, which is gonna be like here. It will be equilibrium if we're talking about this as range. I'm gonna talk about this previous weekly high, previous weekly low, and etc. in the next video. This video is gonna be about liquidity, also about time frame synchronization and how to identify premium and discount market. Thanks for watching. Don't forget to hit subscribe button and set notifications on. Also like this video so other people can find it. And also we have this Discord server when we're posting our trades. Feel free to check it. It's on the main page and also will be in the description of this video.